Hello, welcome to this video on adjustments for final accounts for sole traders for A-Level Accounting. So first of all, we have an overview of final accounts for sole traders. The purpose of final accounts is to determine the profit or loss of the business, to assess financial position, which is equity, which is your assets taken by liabilities. Components, you have the income statement, you have the statement of financial position. Common adjustments in final accounts. You have accruals, which are income or expenses earned but not yet received or paid. Prepayments, payments made for future expenses. Depreciation, allocation of the cost of fixed assets. Irrecoverable debts, debts that are unlikely to be recovered. Accruals. What are accruals? It is money owed or due but not yet received or paid. Example, wages earned but not yet paid. Adjustment in the final accounts is as follows. Accrued expenses are added to the expense account, and accrued income is added to the income account. Prepayments. What are prepayments? They are money paid in advance for future expenses. An example, insurance paid for the next year. Now the adjustment in the final accounts is prepaid expenses are deducted from the expense account and prepaid income is deducted from the income account. Depreciation. What is depreciation? It is the spread of the cost of a non-current asset over its expected useful life. Now, two methods for depreciation. Straight line method is the same amount each year. With the reduced imbalance method, there's a higher depreciation in early years. And adjustment in final accounts, it's added to accumulated depreciation accounts and it's transferred to the depreciation expense in the income statement. Irrecoverable debts. What are irrecoverable debts? They are amounts owed by credit customers that are unlikely to be paid. Example, a customer goes bankrupt or into liquidation and cannot pay. Adjustment in final accounts is as follows. Deduct from trade receivables balance in the statement of financial position and record as an expense in the income statement. Provision for doubtful debts. What is a provision for doubtful debts? It is an estimate of future irrecoverable debts. Why is it necessary? It helps match income with expected costs, and the adjustment in final accounts is create a provision for doubtful debts in the statement of financial position in current assets and adjust the expense in the income statement for the increase in provision for doubtful debts. Or adjust the income in the income statement for the reduction in provision for doubtful debts. Adjustments example. Scenario. Prepaid insurance £1,200. Depreciation is £1,000. Accrued expense, in this case it's for wages, is £500. And the provision for doubtful debts of £200. Right, the adjustments process. The prepaid insurance of £1,200 is deducted from the insurance in the income statement and added to prepayment of expenses in current assets in the statement of financial position. Depreciation of £1,000 is included as an expense in the income statement and added to accumulated depreciation in the statement of financial position. Accrued wages expense is added to wages in the income statement and added to accrual of expenses in current liabilities in the statement of financial position. And the provision for doubtful debts is included as an expense in the income statement and deducted from trade receivables in the current assets section of the statement of financial position. The impact of adjustments on financial statements. Income statement. Adjustments affect both the income and expenses. Statement of financial position. Adjustments affect current assets and current liabilities. Key takeaways from this video. Accruals, prepayments, depreciation, irrecoverable debts, and provisions are key adjustments. Adjustments ensure accurate financial statements, and they reflect a true and fair view of financial position, and accurate adjustments lead to more reliable profit and loss figures and a more accurate statement of financial position. So I hope you've enjoyed this short video on adjustments for financial statements for sole traders.